Scalping is the art of taking positions in the market for a matter of seconds, sometimes minutes, and extracting hundreds, if not thousands of pounds. Most people think it's gambling, but when you actually master it, when you understand how the institutions move money, making money in trading becomes dangerously easy. In this video, you are going to discover the exact and how to start scalping properly. I don't care if you're a complete beginner or if you've been losing money for years. I'm going to share the exact institutional strategy that allowed me to leave the trading floor in the city and gain total freedom. This isn't just theory. This approach allowed James, a lad from Manchester, to bag his first winning trade just hours after learning the concepts. It allowed Sarah to make £500 in 4 days trading around her 9 to 5, and allowed Paul to turn £1,000 into £10,000 in 2 months, having never scalped a day in his life before this. Look, I know what it's like. You go on YouTube and you're bombarded with the noise. Use this RSI, buy this robot. You're lost between 100 different strategies wondering which one actually works. That is why I created this. This is not a video, this is a complete masterclass. A breakdown of what scalping actually is, why it's a superior form of trading, and concretely how to execute it like a professional. I spent 12 years in this game. I started on the floor in London. I've worked with the big boys. I've seen the institutional side. I've tested hundreds of retail strategies, and I've thrown 99% of them in the bin because they just don't work. By the end of this video, you have a complete plug and play system to go and fetch your first few £100 from the markets today. I've structured this masterclass in 2 phases. First, we're going to cover the key concepts, the institutional rules you need to follow to stop trading like a retail dummy and start trading like a bank. Then in the second half, I will open my charts and show you the full strategy step by step and take a live trade in front of you. This is a free course. I could charge thousands for this intel, but I'm giving it to you for free. All I ask is that you watch until the very end, because one missed detail could cost you your deposit. Imagine for a second, what does life look like when you have a skill that pays you on demand, a strategy that takes less than 2 hours a day, the ability to buy your family what they need, the freedom to travel, the freedom to sack off your boss. But you need to focus, close the other tabs, put your phone away. And if you appreciate the effort my team and I put into this, smash the like button down below. It helps get this real education out to more people. Let's get into it. We start with the basics. Rule number 1, betting on the right horse. This might shock you, but you cannot scalp just any asset. Scalping is about speed, it's about precision. Retail traders think a chart is a chart. They think that they can trade, Euro GBP the same way they trade Bitcoin. This is a one-way ticket to blowing your account. Think of trading like a boxing match. You're stepping into the ring against the market. If you're nimble, fast, and looking for a quick strikes, which is scalping, you don't want to fight a sluggish, heavy opponent who just leans on you. You want to fight with movement. In the city, we talk about liquidity and volatility. 80% of assets are useless for scalping. They're too slow. The spreads will eat your profits. We need assets that move. We need volatility. Now, I hear you.
But Jay, isn't volatility dangerous? That isn't how people lose money.
Volatility is only dangerous if you don't know how to drive. If you put a learner driver in a Formula 1 car, they'll crash. If you put Lewis Hamilton in one, he wins championships. Volatility is where the money is. Think of a surfer. If you go to the coast and the sea is flat, you aren't surfing, you're just floating, you're bored. But when the swell picks up, when the waves get big, that's when the pros go out. That's when you get the ride of your life. If you trade flat markets your whole life and make pennies, or you step up, master volatility and make the real money. So what do we trade? You want the assets with the highest institutional volume. Indices, the DAX, German 40, the FTSE 100 sometimes, but mainly the US indices, the Dow Jones, US 30, the S&P 500, and the king of volatility, the Nasdaq, NAS 100. Commodities, gold, XAU USD. This is my personal favorite. It moves fast and respects levels perfectly. Crypto, Bitcoin, highly volatile, great for weekends. Do not try to scalp obscure Forex pairs with no volume. Stick to the beast. I've listed them on the screen. Screenshot this. Rule number 2, before the hour, it's not the time. After the hour, it's too late. We're talking about timing. In London, on the trading floor, we didn't just trade randomly. We traded specifically around the opening bells. Most retail traders ignore this. They open their laptop at 11 a.m, see a chart and press buy. That's suicide. Anyway, back to the surfer analogy. You can have the best board strategy, the best fitness mindset, but if you go to the beach at low tide, there's no waves. You're just standing in the mud. 2 hours earlier, it was pumping. In trading, we have tides. We call them sessions or kill zones. You need to know exactly when the volume hits your specific asset. You can use sites like Metaf or Forex Factory to check volatility, but let me save you some time. I'm going to give you the London times you need to know. If we look at the volatility for gold for the US indices, if you look at Nasdaq at 9 a.m. UK time, it's dead. It's flat. The Americans are asleep. If you try to scalp that, you'll get chopped up. Here are the golden hours UK time. You've got the London Open, 7 a.m. till 10 a.m. This is when Europe wakes up. Great for the DAX, gold and GPB pairs. The New York overlap, 1 p.m. to 4 p.m. This is the holy grail. London's still open and New York wakes up. The volume's insane. The US close around 4:30 p.m. to 6 p.m. If you're trading outside these windows, you're essentially gambling. You want to put the odds in your favor. Wait for the volume, wait for the institutionals to step in. So we know what to trade. Gold, Nasdaq. We know when to trade. London and New York open. But there's one trap that catches out 90% of beginners, and it's called over trading. Rule number 3. This one is non-negotiable. Plus 1% per day. You're probably thinking, Jade, come on, scalping is, about making fast cash. Why limit myself? Look, scalping is the Ferrari of trading. It's high speed. Last month alone, less than 2 hours a day, I cleared over £50,000. You can see my profit and loss on the screen. When you know what you're doing, you can make £1,000 or £2,000 in minutes. And that is exactly why most people fail. Because when you make £1,000 in 5 minutes, your brain releases dopamine. You feel like a god. You think the market is an infinite ATM. You want more. Let's go back to our surfer. He's out there. The waves are perfect. He's catching rides left and right. His mates on the beach shouts, "Oi, come in. The tide is turning and there are sharks spotted in the water." The surfer thinks, "Sod that. Look at these waves. I'm making a killing out here. Just one more." He takes another wave, then another. He ignores the warning. Eventually, he gets exhausted, makes a mistake, or the shark, the market, takes a leg. In trading, you are that surfer. The sharks are the algorithms and the institutional desks. If you stay in the water too long, they will eat you. I've seen guys on the trading floor make £10,000 before lunch, get cocky and give back £15,000 by 4 p.m. They didn't know when to stop. Before you sit down at your desk, you need a walk away number. For me, it's often 2% of my account or a fixed sum, say £500. Once I hit that target, I close the laptop. I don't care if the market offers the best setup of the year 5 minutes later. I'm done. I go to the gym. I see my family. I live my life. If you don't have the discipline to walk away with profit, you are not a trader. You are a gambler, and the house always wins eventually. Rule number 4, data equals catalyst. In this city, we live and die by the economic calendar. Retail traders ignore it, get wrecked, and wonder why the chart moved 100 pips in 1 second. You need to understand the market moves based on liquidity, and nothing injects liquidity like major economic news. I'm talking about CPI, inflation data, NFP, non-farm payrolls, interest rate decisions. You don't need a Bloomberg terminal for this. Just go to the Forex Factory. It's the industry standard calendar. You're going to filter this. Click the filter icon, uncheck yellow and grey. We don't care about lower impact noise. Keep only red, high impact and orange. Currencies, select GBP, the pound, and USD, the dollar, maybe euro if you trade the DAX. Look here, today at 1:30 p.m. UK time, we have US inflation data coming out. If you're scalping the Nasdaq or gold at 1:29 p.m, you're asking to die. The spread will widen and the volatility will spike. The institutional secret, amateurs try to gamble during the news. They guess, good news equals buy. Pros wait. We wait for the numbers to drop. We wait 15 minutes for the amateurs to get liquidated and for the initial chaos to settle. Once the dust settles, the market chooses a direction. That is the catalyst. That 15-minute window after the news is often the most profitable time to trade. The volume is huge and the trend is established. So, rule number 4, always check the calendar. If there's a red folder event, step aside, let the news hit, and then attack. Right. You know what to trade. Volatile assets. You know when to trade. London, New York sessions. You know how much to take. Daily targets, and you know what to avoid, news spikes. Now, I'm going to open up my charts. I'm going to teach you the specific institutional scalping strategy I use. This isn't some RSI crossover rubbish. This is pure price action and market structure. It's simple, but simple does not mean easy. You need to focus on every step. If you master this section, you can literally apply it immediately after this video and start seeing results. Let's get into the strategy. Right, let's get to work. This is the exact strategy I use. It's simple, but simple does not mean easy. You need to be disciplined. If you skip any of these steps, you are just gambling. Step 1, lock your asset and your session. I'm pulling up gold, so XAU USD. This is my bread and butter. I check the volatility. For us here in the UK, the prime time for gold is the US session. That means 2:30 p.m. to 6 p.m. UK time. I want to be crystal clear here. It is currently 10 a.m. in London. I'm not touching gold. Why? Because the volume isn't there yet. It's a waste of mental energy. In this city, we have a saying, you aren't paid by the hour, you're paid by the decision. A A salaried employee works 9 to 5 to get paid. A trader can work 15 minutes and make a month's salary. Don't sit at your screen all day. It makes you a worse trader. I log in at 2:15 p.m. I prep and I trade the US Open. That's it. Step 2, identify the trend. We need a bias. Are we buyers or sellers today? We never guess. We follow the smart money flow. The trend is your friend. It's a cliche because it's true. Fighting the trend is a mug's game. You can use Dow theory, so high highs, higher lows, but to make this efficient for you, we are going to use a visual tool. Go to indicators, search for super trended moving average. There are a few, pick the one by Kyvan. Now, listen carefully. This is institutional tweak. Go to the settings, so the cog icon, change the MA length to 200. The 200 moving average is the gold standard for banks and hedge funds. If the price is above the 200, so the green cloud, we are in a bull market. We only look for buys. If the price is below the 200, red cloud, we are in a bear market. We only look for sells. Now, here's the trick. Do not look at this trend on a 1 minute chart. It's too noisy. We look at the trend on the 1 hour, so H1 time frame. This gives us the big picture. Look here on the 1 hour chart. The cloud is green. That means today I am a buyer. I don't care if I see a beautiful sell setup in the 1 minute chart. I will ignore it. By filtering out the counter trend trades, you instantly eliminate 50% of your losing trades. And pro tip, to stop the indicator changing when you zoom in, go to settings again. Under time frame, lock it to 1 hour. Now, when I drop down to the 1 minute chart to snipe my entry, I can still see the 1 hour trend in the background. Green cloud means go for buys. Step 3, quick check of the calendar. I'm looking at today. I see an orange folder event at 4 p.m. Fed Chair Powell speaks. Okay, noted. That means I have a window from 2:30 p.m. to 4 p.m. to make my money. At 3:55 p.m., I'm closing everything. I'm not holding a scalp through a Fed speech. So the setup is locked in. Asset, gold, so XAUSD. Time, US session, 2:30 p.m. UK time. Bias, bullish, above the 200 EMA and H1. News, clear until 4 p.m. Now we need to find an entry. We don't just click buy because it's green. We need a precision entry point. We're going to use the Fibonacci retracement, but not the way you learned in school. We are using the institutional discount zones. Let me show you exactly where to click. Right, let's talk about entering the market, okay? So most retail traders guess. They see a green candle and FOMO in. Institutionals do not do that. Banks do not buy at market price. They buy at discount. We're going to use the Fibonacci retracement tool to find that discount. But first, look at this chart. It looks like a rainbow. This is the default setting. It's useless. I want you to strip this down. Go to settings, uncheck everything, keep only 0, 1, 0.5, 0.618 and 0.786. Turn off the background colors, make the line simple, gray or black. Why these numbers? 0.5, so 50%, this is fair value. 0.618 to 0.786, this is the OTE, optimal trade entry. Think of it like buying a Rolex. If I offer you a Rolex at market price, you might buy it. But if I offer you the same Rolex at 62% off or 78% off, you're biting my hands off. This is what we wait for. We let the price explode up, impulse, and we wait for it to come back down to the discount store before we buy. So step 4, plotting the OTE. We are on a 1 minute time frame now. We see the price shoot up, impulse. I take my Fibonacci tool. I click on the swing low where the move started. I drag it to the swing high where the move paused. Now I have a zone. The area between 0.618 and the 0.786. I call this the golden zone. Now comes the hardest part of trading. Doing nothing. The price is dropping. It's red. It looks scary. Newbie traders are panic selling here. But we are waiting. If the price turns around before touching the 0.618 line, I do not trade. I don't care if it goes to the moon. Without my discount, I'm not interested. This discipline is what separates the pros from the gamblers. Bang, the price taps to 0.618. We're now in the zone. This is the trigger. I don't wait for 5 confirmation candles. In scalping, speed is key. I execute the trade. Step 6, immediately, and I mean immediately, we place a stop loss. I see gurus online, telling you not to use a stop loss because banks hunt them. Rubbish. If you trade without a stop loss, you will eventually lose your house. Period. Losses are simply the cost of doing business. Where do we put it? We are scalping, so we need to be tight, but not too tight. We place a stop loss just below the swing low, the 100% or the 1 level on fib. Some people try to be clever and put it just below the 0.786 to get a massive risk reward. Don't do that. Gold is volatile. It loves to wick down, grab liquidity, and then rocket up. Give the trade room to breathe. Place it under the structural low. If the price breaks that low, the setup is invalid anyway. So we want to step out. Step 7. When do we cash out? We're not trying to catch the top of the market. We're not greedy. We're using a fixed risk reward ratio. We aim for 1 to 2. This means if I am risking £100 on this trade, I want to make £200. Why 2? It's the magic number. With a 1-to-2 ratio, I need to be right 34% of the time to break even. I can lose 6 trades, win 4, and I'm still profitable. With this strategy, my win rate is usually around 60-65%. Do the maths. That is how you print money. Summary of the trade: entry at the 0.618 fib line, stop loss below the swing low, take profit 2 times the distance of the stop. Now the trade is live. We've done the analysis, we've executed the plan. Now we let the market do its thing. We do not touch it. We do not panic close. We let it hit the take profit or we let it hit the stop loss. Let's see how this plays out live. Okay, we are in the trade. Now, listen to me. This is where 80% of traders mess up. They stare at the profit and loss. They see plus 50, then minus 20, and then plus 40. Their heart rate goes up. They panic and close for a tiny profit because they are scared to lose. Institutional traders don't feel fear because we have rules. We have a rule called the break-even trigger. Here is the secret to sleeping well at night. As soon as the price pushes up and breaks the previous high, so it creates a higher high, we do something crucial. We move our stop loss from loss zone to our entry price. Look at this. The price just broke, structure upwards. I slide my stop loss to the entry point. Now this is risk-free trade. If the market turns around and crashes, I lose £0. I pay the broker spread, maybe £2, but my capital is safe. If it hits the target, I make £200. This is called a free roll. Once you're risk-free, the stress vanishes. You can walk away. Look at the momentum. Because we bought at the institutional discount to the 0.618, we are riding the wave with the banks. We're not fighting the current. We're up $130, $150. The price is approaching our target. Do I close early? No, amateurs close early. Pros trust the target. Boom, target smashed. That is $180, approximately £140, banked in about 12 minutes. I didn't do anything magic. I identified the trend, H1. I waited for the session to the US Open. I waited for the discount, fib, and I managed my risk. Simple, boring, profitable. Now, look at the chart again. See this move that happened 2 hours ago? Impulse, pull back to 0.618, rally. See this move yesterday? Impulse, pull back to 0.618, rally. It happens every single day. Whether you trade at 2 p.m. or 4 p.m., the pattern repeats. You could have taken this exact trade earlier in the London session and made the same money. You don't need to catch every move. You just need to catch one clean move a day. That is it. One trade, £150, repeat 5 days a week. That's £750 a week extra income, tax-free if you use spread betting in the UK, just from clicking a button. Right, stop. Put the mouse down. We have covered the theory. You know the strategy, but here is the brutal truth. Watching this video does not make you a trader. Just like watching a video of Anthony Joshua, boxing doesn't make you a heavyweight champion of the world. You need to get in the gym and hit the bag. You need to put in the reps. I'm not going to send you out into the live markets to blow your savings today. I have too much respect for the game. I am assigning you 3 specific drills. If you want to make it in this industry, you will do these exercises. If you're lazy, you will skip them and you will fail. It's as simple as that. So get a pen. Here is your homework for the next 7 days. Drill number 1, the 50 rep back test. Your brain is not yet wired to see the institutional discount we talked about in part 4. You need to retrain your eyes. The task: go to TradingView, select gold, so XAU USD, use the bar replay mode, go back 3 months. I want you to find 50 valid setups. The criteria: recall from part 3 and 4. Step A, check the H1 time frame. Is a super trend green, bullish, or red, bearish? Step B, drop to the 1 minute time frame, find the impulse. Step C, draw the Fibonacci. Did it touch the 0.618? Step D, check the time. Was it between 1 and 6 p.m. UK time? If it ticks all those boxes, screenshot it, save it in the folder called Winning Setups. Do this 50 times. By the time you finish, you won't need to think. You will see the pattern instinctively. That is how we are trained on the floor. Drill number 2, the morning briefing. Amateurs wake up and trade. Professionals prepare. For the next 5 days, even if you don't take a trade, I want you to perform the daily audit, okay? So the task: every day at 12 p.m, noon UK time, before the US session starts, you must write down the news, go to Forex Factory, part 2, are there red folders? What time? For example, CPI at 1:30, no trading until 1:45. The bias, go to the H1 chart, part 3, is gold above or below the 200 EMA? Write down today I'm only looking for buys or only looking for sells. The levels, draw your horizontal support and resistant lines from the 1 hour chart. If you don't do this audit, you're not allowed to open your trading app, period. Discipline starts before the market opens. Rule number 3, the 2-strike demo challenge. This is the final boss. Open a demo account, part 5. Do not use real money yet. I want you to take 10 trades using the strict strategy, okay? The rules: risk, you must use the calculator, exactly 1 or 2% risk. No guessing lot sizes. Management, You must move stop loss to break even when the structure breaks. Part 5. The target, you must aim for 1 to 2 risk reward. The 2 strike rule, if you break your rules twice, for example, you FOMO into a trade without a fib setup, or you move your stop loss further away to avoid a loss, you fail. You have to reset the account and start again from trade 1. You're not allowed to touch real capital until you've executed 10 perfect trades in a row on demo. Perfect doesn't mean winning. You can lose money and still have a perfect trade if you follow the rules. We are judging your execution, not your profit and loss. Listen, I know this sounds like a hard graft. It is, but look at the results of people who did this. Paul didn't turn £1,000 into £10,000 by guessing. He did backtesting. He mastered the drill. If you do these 3 exercises, the backtest, the briefing, and the demo challenge, you'll be in the top 1% of traders before you even deposit your first pound. Most people are too lazy to do this. This is why most people lose. Don't be most people, be the smart money. Once you've started these drills, you will have questions. Jay, does this setup count? Jay, is this news event dangerous? You need a place to check your homework. This is why my private community exists. It's not just for signals, it's a classroom. You can post your screenshots. My team and I and 7,000 other traders will give you feedback. Yes, that's a valid OTE, or no, you missed the H1 trend, okay? How to join? It is free. I don't charge for education. You just need to be trading with our partner broker to ensure we have the same charts. Click the link below, send me the keyword access on Telegram and get into the group. Start your drills today, post your results in the group. Let's get you profitable. I'm Jay. That's it for today. Class dismissed.